Now we have seen from previous slides while discussing AIS, we know for a fact that it is part of a control mechanism, specifically internal control. Because we could not control what is outside of our company, we can only control what inside and within our reach. So internal control is simply a process designed to provide reasonable assurance regarding the achievement of a company objective related to operations, reporting, and compliance. The objective of having an internal control typically would be to safeguard our assets, especially cash, as cash is the heart of a company or a business regardless of the source, to enhance the reliability of accounting records, because we know for a fact that if the records are not reliable, who wants to use them? Even the internal users will question unreliable records, let alone external users. If they knew lah. Internal control also able to increase efficiency of operation. Since we know the control is there, all possible risks have been taken care of. So we would feel safe and have nothing to worry about, because we know if something is not right, the internal control system will capture it. And finally, to ensure compliance with laws and regulations, internal control would definitely be there to ensure this, as not to have problems with the law. Internal control also has components which refer to what constitute an internal control system. So for the first one is a controlled environment. Now this relates to the responsibility of the top management to make it clear to all internal parties that the company values integrity and will not tolerate unethical activities. In other words, the company is controlling the environment within the company. Policies regarding this must be made known to all levels of employees, and action or punishment must be seen as implemented. Only then people will see that you mean what you said or put as a policy. In short, you must make known of that controlled environment. Second is risk assessment. This is the act of identifying and analyzing various factors that create risk for the business. For example, say that you are a manufacturer of a highly demanded electronic parts that are needed in most modern electronic devices that no other company has produced. On top of that, some of the parts are fairly small, like an electronic chips, that you can easily put them in your pocket. So if you are the owner or manager of that factory, what risk can you think of in relation to that? Now, after we identify the risk, we need to figure out what to do to manage the risk. So in this case, you might want to have an intelligent security, for example. Not talking about human security, but perhaps electronic security that can detect metals or materials used to produce that electronic chips at the exit of the factory. So every time a worker, maybe a production line worker, exit the premise, he or she must go through the device to detect the parts, just like you have seen in airports. The third one is control activities. As the continuation from risk assessments, company needs to come up with policies and procedures to address specific risks faced by the company to reduce the occurrence of fraud. So from our previous example, you might have a rule that states every worker must go through the detection device and states the consequences of failing the detection device. You might also ask all workers to sign a security agreement or confidentiality agreement to ensure that no recipe of the electronic parts being shared with outsiders. Number 4, information and communication. This simply refers to company communicating the policies and procedures and relevant information in relation to that to everyone inside the company as well as outside of the company. For example, we extend the regulations on going through the detection device to external parties who might visit the factory for whatever purpose. So before they come, you must communicate that rule to them to avoid misunderstanding. Number 5, monitoring. Finally, the internal control system itself, no matter how effective you think it may already be, we need to monitor it periodically to check for adequacy of the system in managing risks faced by the company. Any deficiencies found must be brought to the attention of the top management for further action. Let us now focus on one specific component of internal control, that is control activities. What are the principles of control activities? In other words, what are the basic guidelines for us to come up with the control activities? The first one is establishing responsibility. In other words, you are responsible for what task or what job or what asset. For example, in supermarket, you will see multiple cash registers, right? Have you ever witnessed a time when a cash registrar exchange shift, or a cash registrar preparing his or her cash register? What did you observe? If you have, you will notice that each cash registrar will be responsible for his or her own cash box. For example, here we have cash registrar number 1 assigned to Mayin and cash registrar number 2 assigned to Akmal. When they exchange shift, they will take their own cash box and the new cash registrar will put in place his or her own cash box. This way, if the supervisor, for example in this case Al Pacino here, when trying to match the amounts of cash in the box with the total of cash receipts for the day, they know who will be responsible if there is a shortage of cash for each cash box. The same principle could also mean limiting access to only authorized personnel, meaning Mayin and Akmal will be responsible and authorized for their own cash box. Nobody else will have the access. Even Al Pacino will have to do the matching of cash in front of Mayin and Akmal individually. From there, Al Pacino will confirm the amounts and Shamini will check if the amount of cash sales tally with the record in the system. Nobody else has the authority to check or change the amounts in the system, only made available to Shamini. The second principle is segregation of duties, which is very important in an internal control system. The objective of this is to provide reliable basis for evaluating the work of another employee. There are two common applications of this principle. The first one is to have different individuals being responsible for related activities. If we can use the same example as before, we have the cash registrar responsible for receiving cash from customers and responsible for his or her cash box. Al Pacino, as the supervisor, will be responsible to check the cash amount in the cash box and see if it matches the cash receipts. And then Shamini being responsible to check the record from the system and confirm if it matches the result from the day's sales from Al Pacino. So in this case, for sales activities, we have different people being responsible for different tasks, but all related to sales. Now, can you imagine if the cash registrar will also be the one who matched the cash amounts and the cash receipts, and also the one who will check the record in the system, and at the same time has the access to the system to amend the amount? Another common application is record keeping of asset being separated from physical custody of asset, meaning one person keep a record of asset, the other safeguard the physical asset. For example, for procurement and inventory activities including the warehouse. We have Aisha as the procurement officer making the purchase orders, while when the delivery comes in, Wilson will be the person in charge to receive the actual inventory. He will check if the items delivered are according to the order made by Aisha. Manisha, on the other hand, will confirm the receipt from Wilson and key in the data in the system to confirm acceptance, while accounting department will then acknowledge the receipt and can now proceed for payment. Manisha is the warehouse manager that will look after the physical inventories in the warehouse, while another person will be responsible for authorizing the inventories entrance to the warehouse, like Aisha and Wilson, and another person is responsible to authorize the exit of the inventories from the warehouse, like Shafi, the sales manager. At the end of the day, warehouse manager will do a stock take or a manual counting of inventories available in the warehouse and compare her result with the record from purchasing manager and sales manager in the system. The third principle is documentation procedures. This is fairly common because documents provide evidence that a transaction has occurred. For example, when an order is made, a sales officer will issue an invoice to customer to notify the amount owed. Customer then make the payment and he will be issued a receipt, denoting that payment has been made. So at the end of the day, any invoices that has no related receipts, we know that payment for that sale or order has not been made or sales has not been completed yet. So you might want to call the customer and ask if he or she wants to proceed with the purchase or if there is a change of mind. These documents usually pre-numbered for easy tracking and must be promptly forwarded to the accounting department for data entry. Another common documentation is check, where each check is pre-numbered. And the check stat will have the same numbering as the section left in the checkbook. If needed, the information can be matched later, such as the date, the amount, and to whom the check was issued. The fourth principle is fairly simple, that is, the use of physical control. It relates to the safeguarding of assets and enhance the accuracy and reliability of accounting records. I mean, if you are sure that the source documents are safe and you know that nobody has the opportunity to change the real documents with the fake ones, then you can be comfortable with the accuracy and reliability of the accounting records or values that comes from the source documents. For example, how do you do this? Simple. We can have a safe or vault which code is only known to 1 or 2 authorized personnel. We can also have password or passkey if we are talking about digital documents stored in computers, so nobody can change the data recorded. Security alarms and CCTV are also beneficial if we are safeguarding physical assets like inventories in warehouse. The fifth principle is independent internal verification. This is related to the earlier principle, that is, having few people responsible for related activities. If you refer to previous example for procurement and inventory, when Wilson received items ordered, he will verify that with Aisha. Manisha will verify the amount and items received with Wilson and Aisha before confirming it to accounting department. Accounting department will have to verify the amount that need to be paid with Manisha. But of course, accounting department can verify that by the accounting system endorsed by Manisha. So here we have, before payment made to supplier, 3 people involved and will be verifying the amount and value. Now, can you think of other examples? The last principle is human resource control, that is, control mechanism on the human, i.e. on the employees. To name a few mechanisms, we can bond employees who handle cash. Typically, like cash registrars, they will be responsible with the cash in their care. Any shortcomings unexplained, they will need to repay with their own money. This gives some sort of protection against theft by employees. Also, we recognize that human is just that, human. We are not robot. We do get tired and bored at times, especially if we are doing the same routine or task day in and day out. So to overcome possible fatigue and boredom, we are recommended to rotate duties among employees. And also, depending on the type of work, sometimes employer would require their employees to take vacation to freshen up and come back anew. And even before we employ people, we can do some control. That is, by doing background checking. See if they have any criminal records or anything of the sort. In the US, employers would be able to obtain or have access to that record. It starts with verifications of an individual's identity based on the information provided by the employees, like birth dates and social security numbers, which will be used to conduct search using a variety of public databases and court records, depending on the type of information the employer is sorting after. I'm not too sure if we have that in Malaysia. Now, having discussed internal control, I think we can already tell that there will be limitations. First and foremost, whatever internal controls that are being designed, it is there to provide reasonable assurance of proper safeguarding of assets and reliability of accounting records. There is no 100% guarantee that theft and fraud will never happen, but we can be sure that after taking that step, theft and fraud perhaps not going to easily happen. The concept of reasonable assurance lies on how much a company would be willing to spend, because control may vary with risk level of activities. For example, a company may consider that cash to be high risk while finished goods in warehouses as low risk. So they might have stricter controls for cash and would be willing to spend more in safeguarding cash instead of goods, especially if their goods are bulky, heavy, which make it difficult for employees or anyone for that matter to sneak those goods out of the warehouse. Another thing is we are dealing with human. And as we mentioned before, human is just that, human. We got tired, we got bored, we made genuine mistakes, and at times, unfortunately, we do have employees who are indifferent, meaning they couldn't care less of what happened to the company. If the company lost some goods, that is the company's loss, not my loss. It has nothing to do with me. And sometimes we do have people with bad intention working for us. They might come together to get around the controls. Like, for example, one employee may take extra goods out of delivery, and the warehouse manager may endorse that by forging a false document from, say, for example, sales department. All documents are there, but they are all fake. This will significantly reduce the effectiveness of the system. And finally, the size of business. As we know, implementing certain control mechanism may not come cheap. For example, you may want to have segregations of duties, but due to limited resources, your company may not be able to hire more people to segregate duties and do the verification. So you might employ one person to do several tasks. So that will be a challenge in applying certain internal control principles.